Well, good afternoon. Happy Friday, May 29th. Mark Milam here. Let's get right to it. A little better week, and boy, we needed it. After last week, we saw mortgage-backed securities take it on the chin, and so this week we've seen some improvement. All of this sort of hopeful, white-knuckle, bite-your-bottom-lip improvement hope from the markets on what's happening with the negotiations for peace between the United States and Iran. Apparently, negotiators have reached a tentative deal for a 60-day ceasefire that also involves reopening the Strait of Hormuz. That would be certainly welcome. We'll see oil prices hopefully start to drop, although that's probably going to be a more elongated process than anyone wants. But it still has not been signed by the president. Sitting on the president's desk as of right now, 2:18 Eastern time on Friday. Hopefully by the time you watch this, we've heard that the president has signed it. Let me flip the screen around here. I'll show you what's been happening with mortgage-backed securities. Past 5 business days, we're seeing an increasing trend. That's what we want. That means the associated interest rates are coming down as the value of the security goes up. What else is going on? Well, the prediction markets now are pricing in higher probabilities that the Strait of Hormuz reopens. The red line by the end of July, 63% there. The blue line by the end of June, we're now up to a 48% chance of reopening by the end of June. And by June 15th, a 15% chance. So we'll keep our fingers crossed that these 15% are in the right, particularly as this unfolds in real time. We know right now that the president is evaluating the proposal and also evaluating Iran's request for billions or hundreds of billions of dollars to rebuild their country after being bombed. Also in this week, inflation ticking up to 3.8%. This is the Fed's favorite measure of inflation. It's called personal consumption expenditures, and the Fed really wants to see that at a target rate of 2%, and we were almost there at the end of February. But boy, we're seeing it tick up now, almost double the Fed's target rate of 2% at 3.8% year over year. This is all around energy prices, not just gasoline, obviously the price of oil, but also natural gas, other forms of energy all being impacted. And because oil is so pervasive and prevalent in so much of what we buy and sell, it's causing those prices to rise in good fashion as well. So we'll just keep our eye on that. And really, everything hinges around getting the Strait of Hormuz reopened, not just for the actual flow of oil, but also for market sentiment. Market sentiment plays a big role here, an important role. And if the markets feel confident that we're headed for more peaceful days and an easier supply of oil, and that this crunch that a lot of people are predicting with oil reserves over the next 60 to 90 days doesn't come to pass, the market's going to perceive that positively. We'll see the price of oil come down. That will drag mortgage rates along with it. If I can be of any service to you over the weekend, don't hesitate to reach out. Mark.Milam at highlandmtg.com. Have a good weekend.